Testing sound, testing sound. Hello and welcome everyone. Thank you very much for joining us today for this unique online information session. I'm delighted to have you here with us. My name is Elizabeth Villette, and I am in charge of admissions here at HEC Paris. And I'm delighted to be here today with Professor Etienne Krieger, who will be giving a sample class today on the best practices for fundraising at the startup stage. Now, Professor Krieger is all at once a graduate at HEC Paris, a research faculty who's published numerous articles, scientific articles and books, as well as a business leader. Notably, he was formerly a board member of the Xering company, which is a leading security solutions provider, from its IPO in 2006 to its friendly takeover by Ingenico in 2011. And he is currently head of the HEC Paris Entrepreneurship Center, as well as a professor on the Online Masters in Innovation and Entrepreneurship, where he teaches entrepreneurial finance. So what we're going to do today is I will run you through the academic content of the program, the objectives, the assessments, and then I'll hand over to Professor Etienne Krieger so he can give you a sample class. And then finally, I invite you to stay tuned until the very end if you're interested about finding out how to apply to the program. If you want to learn more about the admissions process and also about our eligibility criteria, stay tuned until the very end of this presentation. All right. So, one more thing before I kick off. I invite you to share your questions and comments with us using the chat box and the question box on the right-hand side of your screen. All right, so about the Online Masters in Innovation and Entrepreneurship. So, in a nutshell, this program, as the name indicates, focuses on innovation and entrepreneurship. In that respect, the content is different than the content that you'll find on the Executive MBA or an MBA program. In fact, it's not an MBA. That's a question I get a lot. It's not an MBA. It's not an Executive MBA. It's a Master in Innovation and Entrepreneurship. It's run by a top-ranked business school, which is HEC Paris. And in fact, all the classes have been conceived by HEC Paris faculty and is run on the very user-friendly platform, which is Coursera. It's got a dual format, and I'll share a little bit more about that in my next slide. It's offered 100% online, so no need to come to campus, no need to incur additional cost to come to campus. Everything is made available online. It is quite affordable, and in that respect, it is different from an on-campus program. Notably, it's around 3 times cheaper than an on-campus executive MBA, and about half the price, 2.5 times half the price of an executive master's. And finally, it is equivalent to an on-campus diploma, insofar as there will be no mention of the fact that this degree was obtained online. The diploma that you will obtain will be a Master's in Innovation and Entrepreneurship. And in fact, like an on-campus graduate, you'll be invited to the commencement ceremony here at Ingenico Joseph, which is optional. If you can't make it, we absolutely understand, but you've got the same status as an on-campus student. All right, so a little bit more about the Online Masters in Innovation and Entrepreneurship. As I mentioned, the focus is on innovation and entrepreneurship. So what we want to do here with this program is to help you develop new products and services, and also to assist you in driving innovation, either within a startup context or within an existing organization. And to go a little bit more into detail about that, we had really 3 populations in mind when we created the program. So we're thinking about aspiring entrepreneurs who are looking to launch their own startup, or who may be missing business skills to take that leap of faith and start their own company. also looking to train entrepreneurs who already have their own company, but who are looking to have their company grow. Either because they're at the startup stage and they're still quite new, or because they've got a mature company and they're looking to see how to continue being appealing to their customers. And finally, the third population that we had in mind were executives working in companies and looking to bring about change, to bring about innovation within their companies. So those are the three profiles that we were looking that we are looking to attract on this program. And you might recognize yourself in some of these descriptions. Now, as far as the format is concerned, as I mentioned in the earlier slide, it's a dual format. So the Online Masters is composed of 20 courses, which can be broken down into two parts. So first part is what we call the self-paced section, and it consists of 12 courses. We call it the self-paced section because those 12 courses have been pre-recorded. So you can take them in your own time. You can take them early in the morning, you can take them late at night, you can take them exclusively on weekends, but you will have to be mindful that you need to finish those 12 courses prior to moving on to the project-based courses and the project-based section. So while it's flexible in terms of when you take the courses, it is time sensitive, this self-paced portion. And then, as I mentioned, the second part of the program is the project-based section. And that section differs from the self-paced section insofar as the courses have not been pre-recorded. The courses will be live courses. So you'll need to be in front of your computer to attend those live webinars and to ask your questions to the professors. And it's also called the project-based section because you will be required to work on a project in a team. And I'll give you a little bit more information about that in a little while. And finally, and this is something that I mentioned in my previous slide, it's an affordable program. The price tag is 20,000 euros, and of course you can stagger the cost of this program. So you can pay in 4 installments of 5,000 euros and spread the payment of the program over 8 months. And you also have the possibility to start smaller, either with a specialization or an online certificate. And if you're interested in those two options, feel free to ask questions in the chat box. Oops, here we go. So a little bit more information about our self-paced courses, which are the first 12 courses which have been pre-recorded. So as I mentioned, these courses will be adapted to you, whether you are an entrepreneur or an executive working in a company. Now, obviously, if you're an entrepreneur, I think you might find value in the first 4 courses, where we'll teach you about entrepreneurship strategy from ideation to exit. So how do you scale up your business, starting from 0 and growing it into a business of around 100 employees. And obviously, you might be interested as well in Sam Afflecky's course on how to scale up operations. When the demand grows, how do you grow your team, and how do you manage the performance of this growing company as well? I think you might be interested as well, if you're an aspiring entrepreneur or an existing entrepreneur, in Christine DeValk's course on marketing through social media. So how do you market on a shoestring? How are you able to use sort of cheap resources to promote your program? Now, if you're an executive working in a company, I think you'll find the next 3 courses appealing. So how do you boost your creativity? And this course is very popular among our current students. How do you think outside the box? You might be interested in new product development, and I think aspiring and existing entrepreneurs alike will find value in that course. And certainly, there's another marketing course which looks at customer-centric strategy through marketing. And obviously as well, whether you're an entrepreneur or an executive, I think you'll find value as well in the last 4 courses, which teaches you what is business strategy and how do you implement a business strategy to be more innovative and to incentivize and engage your employees to be more innovative. I want to point out that there are two courses in bold here, and these two courses in bold represent our open courses. So you can go on Coursera and you can sample these courses. You can, get a taste for the pedagogical style at HEC, and I warmly invite you to check those two courses out on the Coursera website. All right, next is our project-based courses. So the project-based courses, as I mentioned, they'll be live courses. So you'll need to be in front of your computer, typically in the afternoon Paris time, anywhere between 2 p.m. and 6 p.m. And you'll kick off the project-based courses with a course by Mark Beretta on team working. And this is a course where you'll learn about how to work effectively in teams so that you can produce the team project I was talking about. And the idea behind the team project is for you to be able to work either on an intrapreneurial project or an entrepreneurial project, to put in practice everything that you've learned so far and to work in a team in order to mimic the business world. And I think, Etienne, you know that when you're launching a startup, you need to be surrounded by complementary talent. So really trying to reproduce the business world here. A little bit about the online Masters in Innovation and Entrepreneurship timeline. Currently, we're recruiting for the June 15th intake. And those candidates who start on the 15th of June will have 6 months to complete the 12 self-paced courses, so between June and December 2018. And then they will need to move on to the project-based courses from January 2019 to June 2019. So that'll leave you exactly 6 months for part one, 6 months for part two. So you'll want to be taking 2 self-paced courses per month in order to meet that deadline of December 18th. All right, just a quick note on the assessments. So throughout the online Masters in Innovation and Entrepreneurship, you'll be following the videos, you'll be following the courses, you will be assessed with regular quizzes. Once a week, you'll also have to evaluate your peers. You'll also be working on a mini essays, so you'll need to submit mini essays and evaluate your peers. And you will also have 11 proctored exams, so 3 proctored exams in the self-paced section and 8 proctored exams in the project-based section. And as I mentioned earlier, you'll also have a team project which you need to submit in order to successfully graduate from this program. So this was just a very quick presentation of the Online Masters in Innovation and Entrepreneurship. As I mentioned, I'll be talking about the admissions process in just a bit, well, actually at the end of your presentation, but with no further ado, let me pass on the mic to you, Etienne.
Okay, thanks a lot. It's a pleasure to be with you this evening, and well, I will rapidly present myself. I'm an affiliate professor at HEC and teaching entrepreneurship and innovation. I never really left the campus except to participate in several startups as a co-founder. Some of them were successful, others a bit less. But I will try to share all that with you. I teach entrepreneurial finance. I developed a series of tools, of business tools on Excel that I will share with you during the course. So financial modeling tools, financial engineering tools. A tool is only a tool, but it's a means to engage a strategic and financial discussions with your stakeholders. So I'm also HEC's representative for the Paris Seed Fund, which is a 50 million euros seed and venture capital fund created by HEC, Polytechnique, and other limited partners. And so we finance promising startups, and that also helps us to see what are the trends, the current trends in terms of tech startups. I also founded, well, it was 20 years ago, a program called Challenge Plus, which is an executive education program for tech entrepreneurs, and lots of companies have grown, have been successful, have exited through an IPO or an M&A, and one of them hired me on the board as an independent board member, and this company was ultimately acquired through a friendly takeover by Ingenico. So I probably forgot some things, but well, basically I'm a teacher, and I try also to do it in the real life as an advisor or board member of companies. And of course, I'm involved in HEC's incubator at Station F, which is the world's biggest startup campus, and HEC was a founding partner of this Station F incubator. So I will talk rapidly about entrepreneurship at HEC, then see the variance of financial strategies, what is the profit equation, and what are therefore, since it's the purpose of our speech, of the main sources of financing, share with you some recommendations, and then there will be a Q&A phase. Some of you sent me very interesting questions, so I try to address that at the end of this webinar. So let's first start with two questions, so that you can answer on
the chat box.
The chat box, yeah. Could you please name an iconic entrepreneur? Let's take 30 seconds to type some typical names of entrepreneurs.
Yes, feel free to type in the chat box, or you can also type in the question box. Oh, I see we've got a number of questions. Yeah. This is lovely. All right, great. Yeah. Oh, there are a ton of, okay, Elon Musk, Mark Cuban, Richard Branson, Steve Jobs, Jack Ma, Nike, okay, Richard Branson, Steve Jobs, ooh, all right, Richard Branson, okay. Richard Branson, Elon Musk, and Steve Jobs. These seem to be the most popular. Oh, Xavier Niel, nice. Yeah. A French future me. I like this. This is great.
Okay, and then the second question, which will lead us to the financial issues. Could you name an iconic startup? What is, for you, the typical startup you would love to create, to join, or to finance?
Somebody said Warren Buffett,
yeah.
Uber, Criteo, evil Facebook. Okay, Rohit, you've got some interesting answers there. I like it. Airbnb, Skype, Spotify, BlaBlaCar, Silicon Valley. Okay, Dropbox, Uber. So a lot of internet companies come up here.
Yeah. Yeah.
Right. Skype, Spotify, Airbnb. Right.
So interestingly, most of these companies have been financed by venture capital, and some of them have went public, but we'll see that you have several growth strategies. Some companies can be self-sustaining. They develop differently, but you have worldwide leaders who have not been backed by venture capital, or who are even not public companies. And so let's address that. But first of all, let's talk about entrepreneurship at HEC. You know our motto, which is learn to dare, apprendre à oser, and our DNA is basically about entrepreneurship and innovation. That's why we launched this online master, which was also a way for us to urbanize ourselves in order to anticipate this digital revolution. And some of our alumni are worldwide leaders, like Philippe Fourier-Destezet, who is a billionaire who created Adecco, Pierre Bellon. Yes, Pierre Bellon, who is the founder of Sodexo. This company has 400,000 employees.
You might know it if you're on an American campus. It's a catering company.
Yeah. And other ones created asset management companies or young startups, Pierre Kosciusko-Morizet, and even younger ones. I talk about their case during my online master. The founders of Big Mama, which is a huge success. They created a company just 3 years before, and now the company makes tens of millions of euros of turnover and big cash flows. And so we love entrepreneurs, and they come and teach with us and serve as examples in our courses. And so we have a huge market share in France and even in Europe in terms of startup creation. We work on hundreds of innovative projects every year, and we support more than 200 startups every year in our different programs at the incubator, at HEC Entrepreneur, this Challenge Plus program, in the MBA, and tomorrow this online degree where you can come with real projects, entrepreneurial projects or entrepreneurial projects. And so lots of companies, and a huge experience curve for us. And so that's why we created the HEC Entrepreneurship Center, in order to structure all that, because there are lots of energies we had to coordinate. And so our mission is simply to sensitize about entrepreneurship, to educate you through programs, through MOOCs, through elective courses, and to support entrepreneurs. So sensitizing begins with newsletters, or with lots of conferences, initiatives on the Saclay Plateau in Paris, or digital conferences. We sent a newsletter to tens of thousands of participants. We support initiatives like My African Startup, which is an initiative about entrepreneurship in Africa. So every year we select 100 promising startups. This initiative has been made by an HEC alumni, Christian Camaillou, who is himself an entrepreneur, and he is now very famous in order to foster innovation and entrepreneurship in Africa. So education, I will not detail, because we are talking about this online master done with Coursera, but we have a huge experience curve in education, executive education, and acceleration programs initiatives. And when it comes to acceleration and incubation, we have created our own incubator 10 years ago. We are also founding members of Incuballiance, which is France's biggest tech incubator. I'm also HEC's representative in this tech incubator. We have co-founded this Paris Saclay Seed Fund, which is money for entrepreneurs, equity for entrepreneurs, and so we support more and more entrepreneurs. So, and the Alumni Association is a very huge association with about 60,000 alumni, and there are chapters on innovation, there are on entrepreneurship, very dynamic, which is a good way to network in professional chapters. Yeah. So that's all our action, and we of course work with most entrepreneurs come and teach and testify on the campus. So that's our ecosystem. Okay, so there is a recent trend, which is that our students don't wait to have left the campus to create companies. Some of them, before even graduated, Grandes Écoles students, they create a company, they make sales, they hire people, they take trainees, and so we have to adapt our pedagogy with custom designed follow-up, with advice. I forgot to talk about office hours. We have 3 office hours for our graduates, our students, about entrepreneurship and innovation. I attend every 3 weeks to these office hours with other colleagues, with Antoine Leprêtre, who's the head of the incubator, with my colleague Frédéric Iselin, who is also teaching in this online master, and who is more focused on value creation, business planning, value proposition. And so we have more and more such students, and there is also an interest in financing them. So we have entrepreneurs who are entrepreneurs in finance, and there is an increasing trend in impact investing. For instance, Bertrand Badré, I studied with him. He's an HEC 1987. That's my promotion. He graduated, and he rapidly became the CFO of Société Générale, and then he became CEO of the World Bank, and now he's launching blue-orange capital, which is an impact investment fund. And another guy like Nicolas Hazard created directly after graduating a venture capital fund, and Sophia Amish is doing the same thing with future positive capital. So it's not only about cash flows, it's about impact investing, it's about doing good, it's about having a social and an environmental impact. So it's a very burgeoning trend, and we are happy to follow this trend. So let's go to the type of strategy. So it can be summarized in just one slide. You incorporate your company, and either you generate free cash flows and you pay dividends and you acquire companies and you even can go public in order to exit partially and to get some money, or you have to make one or several capital infusions. And we have several interesting examples. Xiring, this was this company that went public. I will address it during my course. Infovista, that made 30 million capital increase before going public, raising $70 million by being listed on the Nasdaq and the European stock market, or Selectis, which will be an example I will address at the rest of this course, which is a biotech company that raised more than $600 million. But so you need cash because you burn cash, and you need equity and other types of resources. So that's your framework. If you are happy to start with a company that does not have a lot of capital expenditure, cash requirements, a service company, for instance, you can generate free cash flows. But if you have an innovative company that requires research and development, hiring a lot of people, investing on marketing, because it's often a winner-takes-all game, you will have to open your capital to financial backers, and that's the name of the game. So
scary slide.
Yeah, this slide is scary, but it's totally exact, and it just means that it's all about generating cash flows, and the value of the company is the sum of its discounted cash flow plus the terminal value, and risk is nothing else than the standard deviation of return rates. The problem is for a startup company, we don't know what are the future return rates. So it's between losing everything and also what is called upside risk. Never forget upside risk, which is making a lot of money. And so you just have, as an entrepreneur, to reward your financial backers, since there is a risk premium, and there is even for a startup company a liquidity premium. You can acquire some shares, but nobody wants to buy them rapidly, and so you have to provide a higher return rate than simply bonds or big companies already listed. So that's about those slides. This slide, of course, I can detail that. We can talk about discounted cash flow valuation model and things like that. But what I can tell you is this formula is very sensitive to high growth and big margins. But it explains you why companies like Uber, for instance, that lost $4.5 billion last year, has a value. It's not the company is not listed. Has a market value of about $50 billion. So that means that people anticipate, the financial community anticipates a high growth and big cash flows at the end of the day. It's the same thing with Tesla. It was the same thing with Facebook. But when Facebook went public, the company already made $4 billion turnover and $1 billion profit. But the valuation was high because people anticipated huge cash flows. Sometimes it happens, sometimes it does not. But if people are convinced that your company will be a cash cow, you will be able to value it at a fair price and avoid being diluted a lot. So I will also develop that during my course. So basically, it's about generating cash flows and future capital gains among several stakeholders: inventors, asset providers, managers, employees through stock options and salaries, founders, and investors. And that will be your duty as a chief financial officer and as a CEO, because you have to attract people. The problem is at the beginning, you have to work with the best people without having enough money to compensate them. So that's the trick in startup. You have to provide hope and to work with the best people, provided that you do not do the best soccer team with the best worldwide soccer player. So there are also issues, still issues about being complementary in terms of competence and in terms of temper. So that's another issue, and at the end of the day, it converts in cash flows or negative cash flows. The reality of European startups, but almost every startups in the world, except in the US and in Israel, is that the profitability, the return of venture capital and even growth capital, development capital, the average return is low. So that's a bit shocking, that's a bit surprising, but some investors, and that's for venture capital, private equity professionals, some of them overperform because they identify what is called home runs, company with a high multiple. For instance, the investors of Facebook made 800 times multiple, which is huge. So you can lose a lot of money in other investments. And so it's a risky game. You have to be cautious in selecting the companies you invest them. You have to bring a value added in order to grow them, not only create a company, but develop them. So there are issues of scalability, which we also addressed during this online degree. And development capital is more profitable than venture capital. So the first phase is very risky, and you have to overcome some pitfalls, some hurdles. And liquidity, it's a bit like Hotel California. You can check up every time you want, but you can never leave. You can leave very late because the exit is often after 7 years, or then the company crashes before, and then you exit, but the company is dead. So the profit equation is the following. So that's the first thing, but it's not, a P&L is not enough, and a profit and loss is not enough. But basically, a company is about customers or future customers. Of course, if you develop a biotech company, you will develop a molecule, and you will not have any customers in the next 10 years, but your molecule will have a higher value, and you will ultimately strike a deal with a big pharma. But basically, for most companies, the profit equation is a number of orders times an average sale per customer, and minus customer acquisition cost. And we'll see, or if you discuss with venture capitalists, that it's highly data-driven, and they really scrutinize these acquisition costs and the customer lifetime value, which has, of course, to be at the end higher, much higher than the customer acquisition cost. But at the beginning, you have to acquire your first customer, which other does for the moment. That's why the company loses a lot of money, because it's often a winner-takes-all game. If there are not other assets, you have to be the first, and for that you need a lot of money. So if we subtract operating fixed costs, taxes, we end up with the net profit. But what communicates with your financing plan is the cash flow, which is net profit plus depreciation, because you don't draw a check for to pay depreciation. And then there we come to the financing plan. Often financiers are not interested into balance sheets. Balance sheets is a thing to view, but the financing plan shows your cash requirements and your cash resources. And there we have not only the cash flows when they are negative, but we also have CapEx, capital expenditure, change in working capital requirements, so customer credit, suppliers, some VCs like companies with negative working capital requirements. So you even have more cash than what the company has to have. So you have to be, that depends on your business model. You have to be very flexible on business model that will generate huge free cash flows, because at the end of the day, cash flow is not enough. It's free cash flows, which is important. That's cash flows minus capex minus change in working capital. And then you have to balance this financing plan. And at the beginning, well, you have more requirements than sources, resources of financing, and then comes the dilemma: how do I balance this plan with equity, with loans, with grants and subsidies? And your talent as a CEO and a CFO will be to find money in the best way. And the most expensive source of financing is, guess what? It's equity, because people take the risk of losing everything, and we'll see that banks don't like risk because it's not their business. And so at the very beginning, as we'll see, they will not finance innovation because they cannot take collaterals on intangible assets. So in theory, there are lots of sources of financing, and indeed these sources exist: development capital, convertible bonds, asset sales, customer prepayment, bank loans, things like that. But at the very beginning, it's quite limited, and so you have to overcome this first phase where you probably find you have to turn to your family. So that's called friends, fools, and family. People who are crazy enough to fund you at the beginning because they know you, because they trust you. So personal savings, innovation contests, extra activities, and gradually you can access to other sources of financing. But at the very beginning, believe me, even what is called seed funds, as we see with the Paris Seed Fund, if there is no traction, they will say, hey, okay, let's go to business angels, to your family, to subsidies, but it's too early for us. So it's ruthless, and the very beginning is often very difficult with small amounts of money, and you have to prove yourself, and you have to jump to another phase in order to scale and to be professional. But the beginning is difficult. Everybody is talking about startups, but the beginning, the first financings are difficult to find, believe me. So the conditions to grant aid is linked to the cash flow you generate, to the existing equity, to the credibility of your business plan. I made a PhD on trust, and the credibility. It's all about believing that your team is professional, that there are some prospects, even if you cannot demonstrate everything. So it's a leap of faith, and that has to be conveyed in your business plan. That is addressed by my colleague Frédéric Gislin. I often teach with him. Of course, the quality of the team is really very, very important. That's the most important component in the decision grid of investors, as we see. And so before moving to capital increase through business angels, growth funds, seed funds, be very careful about initial equity allocation. That will also be addressed during my course and other ones, because giving equity, founders equity to somebody, it's the sweetest cake in the world. So I would have loved to have had even 1% of Facebook at the beginning. Unfortunately, it didn't happen. Otherwise, I would have come with my personal helicopter to teach this course today. But initial equity, that's, you have to make it short, to give it to people who are ready to work full-time, to be involved operationally, not to be paid before the first financing or the first positive cash flows. And that's real. And there comes the issue of the alchemy, the chemistry of the founding team. And then you will make capital increases, new equity with a higher valuation. But if you give too much equity to external people who are not involved, it will be a very negative sign about the professionalism, the credibility of your company. So that's a very important thing. And then your challenge will, in terms of fundraising, to synchronize your fundraising with the key technical and commercial milestones. Basically, a business plan is a roadmap, a technical and a commercial roadmap with key milestones, and you just have to anticipate the cash requirements, because if you look for cash and the company is out of cash in the next 2 months, the company is already dead. So you have to anticipate that, and to get enough cash to cross a significant step, to reach a significant milestone. So it's about crossing all these steps, and at the end to have an optimal valuation, and to also to anticipate some delays. So that will be your duty as an entrepreneur, to anticipate these key milestones and to synchronize and to anticipate fundraising with these key technical and commercial milestones. So bank financing, generally it's very limited at the beginning. It depends on your business model. If I take the business of Big Mama, if you create an innovative restaurant, you can have about 2/3 bank financing. So here there is a leverage, because you can take collaterals on the building, on some of the company's assets, and so you can take debt plus equity. But generally, for a tech company, there are no assets, no tangible assets. There are lots of intangible assets, and you cannot simply take a mortgage on my brain. That's not possible technically. So there are some exceptions, but generally for tech companies, bank financing at the beginning, it's nothing. Or then you have some state banks that provide some loans, free loans, and it's more a kind of subsidy. But a normal bank cannot take the risk, because a bank takes a margin, a 2% margin, and if your company crashes, this bank should have 50 companies like you to compensate this loss. So you understand that it's not the banker's business model to take huge risks. They have to take very secured risk, because it's a difficult business. Well, it's also a profitable business, but not for startups. They don't venture in it. It's not their business model. So subsidies and tax credits. France, for instance, is a tax haven for entrepreneurs, for tech entrepreneurs. We have a new innovative venture status that reduces the cost of your salaries. So engineers, scientists are cheaper through this status. So it has an impact of tens of thousands of dollars or euros if you create a tech company. So I use that for many of my startups. And there are also tax credits. A tax credit is not only a tax credit, it's cash. It's cash for you if you invest on research and development. So we attract even big companies in France to develop their research and development centers. So basically, there is money, there is public money. Some people say that there is even more public equity than private equity, and that's good money, because that's for free. That's for free. They don't take any equity. So let's just take it. But those subsidies are generally capped on the amount of your equity. So the more equity you have, the more subsidies and tax credits you get, and so you can double, let's say, your equity with subsidies. That's the first thing. So the room for maneuver. The question is, is your business compatible with venture capitalists or business angels? So basically, VCs, they want to exit rapidly. So if you want to create a company and to control it forever, don't look for VCs. If you want to grow a company fast and develop it, and if it's compatible with a fast exit through an M&A or an IPO, then there is basically no limit for capital increase. In the last years, there is an increasing amount of money on the stock markets, but also in private equity for companies that are not public yet, and it's in seed funds, in growth funds, and development funds, and you have some pre-IPO financings of hundreds of millions of euros. But it's a very elitistic game, and if we simply look in France, we have about 1 billion venture capital investment, but it's only in 600 companies every year. So everybody is dreaming in being financed, but you have thousands of startups created, and only a few portion of them will be financed by venture capital, because you have to scale fast those companies. So that's venture capital. So I also share with you just a template of an investment memo in order to see what is presented to the investment committee of a seed fund. Namely, in this case, it's the Paris seed fund. So you see that there are only 10 criteria, which are the 3 key criteria of a business plan, and among those items, there are 4 ones that are really important for a VC, for Partech. It's team, market, technology, and traction. So the team is really the most important thing, because it helps the company to pivot, to take opportunities, to deliver, because it's not only a question of having an outstanding strategy. It's about 90% or 95% execution, perfect execution. Those VCs also love big markets. But big markets, big segments, duly identified. And as you see, it starts with what is the business opportunity, what is the unmet need. If there is no need, there is no room for innovation. And so that leads us to the value proposition, which is about saving time and money. So it's only that, but those you have to address all that in your slide deck, and this is then summarize that in an investment memorandum. And if it's crystal clear, it will be conveying and convincing. But point 8 is pure traction. If there is no traction for the moment, if you did not prove yourself, lots of people will say, hey, it's too risky, let's first convince business angels or your family, but demonstrate yourself. But if there is a huge traction, you saw that with Facebook, but we have other examples. Even if there is no business model, if there is a huge traction, a huge audience, people say, hey, there is something, and we'll be able to monetize it. And then, of course, what is the financials? What is the money required? What is the use of funds? What is the possible exit? Because again, a VC is interested in exiting fast. Let's say within 5 years or 6 years, and then we structure the deal. So that's the structure of an investment memo. And the example of Selectis. Selectis is a company that was created in about 2000 by 2 researchers of Pasteur Institute, and they are stars in genome engineering, cut and paste of DNA, and their vision is that genome engineering will be the same. You will do the same with living cells than what has been done in chemistry at the beginning of the 20s. And so with this vision, they started with a rich business angel who invested 2 million euros, and then the company raised 16 million euros venture capital, and the company went public, again raised 16 million euros, and then 50 million euros, and ultimately 600 million euros. They struck deals with Pfizer, with Servier. They spend a lot of money, and recently they are making a new capital increase on the Nasdaq for 200 million euros. So at the beginning, you have basically 2 founders, not 1, but 2 founders.
From HEC.
from HEC,
yes.
yeah, who graduated, who attended to our Challenge Plus program, and ambitious one with a vision. And with this vision, they convinced people who did not know that it was impossible. And 15 years afterwards, because it's more a marathon than a sprint, they made a company which market cap is more than $1 billion. So it's all about ambition, it's about talent, it's about competence, and that's what this is like. And in this case, you exit with a positive return. So there is also another phenomenon you have noticed. I must admit that at the beginning I did not believe in it. Crowdfunding, well, what's that? And then it grew, it grew, it grew. So there are several types of crowdfunding. So equity crowdfunding, debt crowdfunding, also pre-sale of products. And so what is interesting in crowdfunding, it's the crowdsourcing element. It helps you getting feedback on your product, even if it's negative feedbacks. It should help you to shift to another product, and it gives you money. It gives you even customer money. It helps you pre-sale innovative products. You probably heard about this Pebble watch, this connected watch. They got more than $16 million. And so more and more entrepreneurs use that. I recently got an email from an HEC alumni who is starting an equity crowdfunding campaign. But you have to be very professional because, again, it's about convincing people, and so you have to demonstrate a vision, a roadmap, and but it's not it does not compete directly with the biggest venture capital fund. But it's a new phenomenon, and the component of pre-selling innovative products is very interesting because it gives you a feedback, and if this feedback is positive, you have even more credibility to negotiate with venture capital funds. And I know some companies who did that and who raised company equity on a very good valuation. So basically, you have two types of strategy. I like both. The first one is a kind of ultralight aircraft. So you start a company with your partner, the company self-finances. That's an example I take in my course, that is Crazy Voyage, but also other companies. So you take off rapidly within 30 meters, and okay. And the other example is Selectis or Tesla or Uber, where you need 3 kilometers. You have to go fast in order to take off, but it's not the same journey. So and you can go across the ocean, and so it's up to you to imagine the type of company or the type of life you want to have. Some people don't accept the pressure. It's a huge pressure, believe me. For instance, I know the founders of Selectis, that are good friends, but it's also very satisfying at the end of the day to say, I have disrupted the genome industry. So I don't have a preference, and even if I would have one, it's up to you to choose something, and sometimes to switch from a model to another model. But of course, it's not the same cash profile, and it's not the same valuation. Of course, Crazy Voyage, I like them. There are 50 people. There are even issuing a movie about the saga of the company, but it's not comparable to Selectis. So just a last element to share with you. We made a survey on one of our programs, this Challenge Plus program, where we supported more than 800 entrepreneurs for more than 20 years. And so we made a survey in order to say, what did you remember? If you could summarize that in one word. And so they told us, cash is more important than your mother. Cash is king, so cash is very, very important. Not only cash, free cash flow. you'll also have the shareholders you deserve. If you have a lousy team, a lousy project, you probably have lousy shareholders. It's ruthless, it's a bit ironic, but it's true. And another thing, customer money is better than money from financials. I also believe that. Good money, so let's go back to the business of selling actual products and service, and always be vigilant about cash. I know lots of entrepreneurs, even the successful ones, they often have seen face death from very near. So be very vigilant about cash, anticipate your cash requirements. And so I think we are done.
Yes.
We have lots of questions, so can we
let's address those
them?
questions.
Yes.
All right, so let's see. Mason Ellery says, what trends are you seeing in the type of funding available to startups? You have mentioned many sources at different stages, but are any becoming more or less prevalent?
There are these new trends in crowdfunding, even ICOs, initial coin offerings. But if you only take the example of France, every year you have 500,000 new companies, even auto-entrepreneurs, and there is no definition of what is a startup. It's an innovative and a high-growth company, but it's about 2,000, the estimate. And even in those 2,000, if you look, 300 of them are financed by business angels and about 500 by venture capitalists. So the main source of financing is your own money, your own savings, and your family money, and your cash flows. And even if you are looking for venture capital or other sources, you always should have a plan B. If you don't have a plan B, your company is dead. So there are trends. These trends, the interesting one is crowdfunding. There is more and more money, seed money. People are dreaming about getting rich rapidly. But if we look at all the SMEs and not only startups, which everybody dreams about, the biggest source of financing is personal savings plus customer money. Yeah.
All right. Lovely. Thanks. Let's see. How does a company like Quora raise millions of dollars and get billion-dollar valuation? What can someone with similar pure collaborative high-value content creation idea like Quora for a startup do to connect with right angels for seed funding?
That's exactly the paradox of huge valuations. That's what I talked about Uber or Tesla or SpaceX. These companies are hugely money losing, but people anticipate that someday the company, for Tesla, for instance, Tesla is valued more than Renault and PSA, two European car manufacturing leaders. Yeah. So analysts anticipate that someday Tesla will have the growth and the margins of Porsche, 25% EBITDA, which is a huge bet. I don't know, but I have a friend who drives a Tesla, and it's an amazing car, but it's a huge bet. And for the moment, the company is burning a lot of cash. So the only thing that explains that is discounted cash flow, and what is behind discounted cash flow is an anticipation of huge growth and huge profitability. I will share with you some files about cash flow, free cash flows, and I have an example where this valuation between a small company with a fairly nice growth and a high growth company, high margin company, the valuation differs from 1 to 50. So it's really an anticipation, a hope, a dream in huge future cash flows.
Thanks, Rohit, for your question. Thanks, Etienne, for answering that. We've only got a couple more minutes left, and I know you guys have a ton of questions. I'm sorry we won't be able to address all of these in today's webinar. We will make sure to get back to you by email. Let's just maybe take one last question. This question from Valerie, and thank you, Valerie, for sending us a lot of questions.
Valerie, thanks a lot. Really, I love your questions. You send us about half a dozen of questions, and all very interesting. So
maybe let's address this question that he has here. So Valerie says, isn't this because Uber, Tesla focused on product quality and autonomy instead of concentrating on justifying future growth?
I'm not sure. Tesla is building a computer on wheels, really. But quality, if you talk with car manufacturers, they see all the defaults in Tesla, and quality in terms of manufacturing is an issue for the moment. That's why Elon Musk is facing that. I think I even heard that he slept in the factory in order to make the things fixed. So it's an amazing car. It's really an amazing car, and if you drive that, it's so. But for the moment, it's money losing. But people, financial analysts, anticipate that the next step will be even self-driving cars, and Tesla was anticipating that. And for the other company like Uber, it's really a disrupting strategy. If you use that, you have difficulties in using classic traditional taxis. But on a financial point of view, it's simply the anticipation of a winner-takes-all phenomenon, which explains why huge money-losing companies are doomed to become worldwide leaders. If it does occur, you're right. For instance, Microsoft, when Microsoft made an IPO, the valuation was only $350 million, and now it's more than $350,000 billion. So sometimes you are right to bet on a company, sometimes you are not. You should also have invested on Amazon or companies like that. Amazon was losing a lot of money, but it's really cash flow driven, investing, growing fast, acquiring competitors, and markets love that, because at the end of the day, it makes companies like Google or Facebook that generate huge cash flows. The margins of these leaders, but because it's a winner-takes-all game. Yeah.
All right. Thank you very much. And I see the questions are still coming, but I'm mindful about time. And I did promise you that I would share with you some tips on applying to the program. So if you're interested in applying to the Online Masters in Innovation and Entrepreneurship, stay tuned, and I'll share with you how to apply. And as I mentioned, all these questions that we weren't able to address today, we will get back to you by email. Don't you worry.
Thank you for your interest in this topic, and I hope we'll have the possibility to discuss with you, to engage with you. I love talking to my students, and that's why we created these office hours and all these elements. And in this online degree, we can even meet you in real life, or through WhatsApp or Skype, of course.
And the Slack online platform on Coursera. And obviously 40 minutes or an hour webinar is really too short to address all these questions. So we've just given you a tiny little teaser sample here. But of course, we'll address your questions just in an email shortly. So, all right, let me just run through really quickly the application process for the Online Masters in Innovation and Entrepreneurship. So it is a very streamlined application process. You'll need to submit some personal information about your professional background. We'll also ask you to submit 7 essay questions whose answers should be about a paragraph long. You also need to submit 2 recommendation forms, submit an English test if you're not a native English speaker, as well as a 3-minute video presentation. And this enables us to get really a 360-degree view of who you are. I want to reassure you that the GMAT and GRE exams are not required, so no need to go out and take those tests. Certainly, if you already have the scores, feel free to share them with us. But if not, no need to take those tests. Our eligibility criteria for the Online Masters in Innovation and Entrepreneurship are quite simple. We ask that you hold at least a bachelor's degree, that you have at least 5 years of professional experience, that you be proficient in English, so you should have an intermediate level of English at least, and that you have an objective in line with this program. What are you trying to do? Are you trying to become an entrepreneur? Are you trying to be an innovator within your company? Are you trying to propose new products, new services, new processes? We'd love to hear about that, and that will certainly bolster your application. Now, if you don't have a bachelor's degree, or if you don't have 5 years of professional experience, if your English level is, if you've got maybe a lower than intermediate English level, then we recommend that you start with the online certificate. Now, the online certificate is composed of the first 12 courses of the program, that self-paced section which I was talking about. So we recommend you start with those first 12 courses, you earn a certificate, and then you reapply to the master's degree, and your performance on the certificate will count for one of these unmet criteria. So if you don't have the bachelor's degree, but you've done really well on the certificate, well, that's fine. You're maximizing your chances of being admitted onto the online master's. For those of you who are applying to the Online Masters in Innovation and Entrepreneurship, note that we work on a rolling admissions basis. We accept applications all year round, and we have one cohort per month. So currently we're recruiting for the June 15th intake or cohort, and our next recommended application deadline to maximize your chances of being part of the June 15th cohort is next Friday, May 4th. So be sure to get your application in so you can get started with the program and get more of Etienne Krieger's class and learn more about fundraising, both at the startup stage and as you go along and as you progress in your company. I've got here our contact information. So again, my name is Elizabeth Follett. Feel free to reach out to me on that phone number, or you can reach out to my colleague Maria on her landline and on our inbox, omie@hec.fr. I also invite you to copy that URL here. This is a link to book a call with me. I'll be delighted to have you on the phone for a one-on-one call so I can better understand your professional objectives, and we can assess whether this program is the right program for you. All right, so I think we've covered it all. Thank you very much for joining us today. Thank you very much, Etienne, for this wonderful presentation. And we look forward to having you on board soon. Take care. Bye-bye.